Hey, Brandon. This is Brandon Bruckman. He's actually a registered investment advisor, right? So this is a little bit different than someone who's simply a capital raiser and joins as a co-GP. So he can get paid by his clients as not a co-GP. So I'm excited to hear from Brandon and see what he's up to. So Brandon, take it away.
Hi, and thank you. Thank you guys for having me. Also introverted and also afraid to talk. No, I'm kidding. It's
Nice.
fine.
Nice.
No, it's all
But
good. Yeah, and that's a great lead in because I think this will be a little bit different from what we've talked about previously. So give me a second here, and I do have a presentation that I do want to share with y'all. Someone say yes.
yes, I can see it now.
All right, we got to go back because I was reading this before. So yes, as you mentioned, I am a registered investment advisor, and I'm going to talk about syndications, which in and at itself is something pretty strange. Your first thought here might be, did this guy get lost? What is he doing here? Why are you talking about this? Shouldn't you go back to selling stocks and giving financial advice? Why are you talking about syndication? So I want to share a little bit about what we're about and what we can do on syndications and discuss that. And first and foremost, I want to discuss what a registered investment advisor is, anyways, because this is a very common item that's very confusing for a lot of folks, and they don't understand how different professionals play in this space. So first and foremost, a registered investment advisor, as an RIA, as we're referred to, I am a fiduciary for our clients. So here's another word that what the heck does that mean, a fiduciary? By law, I have to do what's in my client's best interest, which means I technically don't sell them anything. I give them advice, I do what's in their best interest, and I have to do that. That is very different than a financial broker or a financial advisor. Very similar terms, very different people. Folks acting in a broker capacity, and these are your Edward Jones of the world, Morgan Stanley, Merrill Lynch, they do not have to do what's in your best interest. Investors really don't know that very often when I describe this. Instead, what they have to do for you is what's suitable. So this is a big difference, right? And so my requirement with our clients is extremely high. Our regulatory thresholds and bars and our exams and audits, they're extremely intense, right? And so it puts us at a higher standard of suitability for our investors. It is different, and we like it. I embrace that. I want to do what's in our investors' best interest. So to me, it's not even a thought process. Of course, I want to be an RIA. So a little bit of background. That's what we do, and I want to discuss too what it is that we do, because it is wide, it is diverse, it is beyond stocks and bonds, it is beyond real estate too that we're looking at, and then finally, the most important point. I want to spend more time here of talking about how we work with syndicators and syndications. And then how maybe that you can look at RIAs too and not maybe overlook financial professionals when you're making capital raises. So, okay, who the heck am I and why am I talking to you? I work with a firm and I'm a co-founder and partner with Insight Investment Advisors. I'm based in Milwaukee, Wisconsin. That's the skyline that you see behind me. My partner, Josh Wright, is based in Kansas City. We'll let you decide which city is better. The answer is Milwaukee. But what we do and what we're really focused on is we're helping real estate investors that run their properties, farmers, business owners. We're really helping them retire, right? And they're going through this transition period, and very few of them know about the options that are available to them to optimize their tax situation and earn passive income. So I'll describe that briefly and what that means. We do keep traditional investing clients as well. That's my background and basis. I don't come at real estate from a real estate background at all. So I was very much a newbie 5-6 years ago, and I had to learn this business too. I have a leg up. I spent a lot of time at a very large hedge fund, $15 billion in management. I walked through the financial crisis. I spent a ton of time with distressed mortgages and that entire industry. If you ever seen the movie The Big Short, I lived The Big Short, and it was horrible. It was not the good end of it. It was the really rough end of it. It was a very scary time. But of course, I learned a ton about how capital works, how money flows, and really the inside baseball that a lot of us don't see. So that's the help that I can bring, or the experience that I bring to this space, and the way that we sort of look at deals and all investments has that sort of eye to it. Very much a risk mitigation sort of thought process. That's me and my family. That's me with a beard. You can decide which way I look better, beard or no beard. Don't drop that in the comments. So what do we do on syndications in particular? the first and foremost thing that we work with and customers that we work with, they're all looking to do typically a 1031 exchange. So we're helping them walk through that and what that means. If you don't know what a 1031 exchange is, that's okay. Not important for today's presentation. What will help them do though is to get passive. And I will talk about this a little bit later of how the instruments that we help them do that. But the biggest thing in where we add value is performing the due diligence on these investments. So we'll do that on the syndications. We will pull those apart in every single detail. The last presenter referred to, talking to engineers about investments. If you think they're interested in numbers, hold my beer, because we really want to dig into the details and understand every aspect of the particular deals we're looking at working on. That's where we add the most value. The biggest instrument that we use to help these investors in a 1031 exchange, again, is something you may not have heard of, is a Delaware statutory trust. And again, your head may be spinning. What is he talking about? A Delaware statutory trust, just think of it this way, very simply. It's another form of syndication that the IRS has deemed as replacement property in a 1031 exchange. So for the investor, it's just like buying property, except they get to be a passive investor, very much like an LP. So it's a huge advantage for someone who is looking to get out of active real estate and to get into passive real estate and do the 1031 exchange. You can do all of this at the same time with this investment, right? It is very different than a lot of the deals that you're probably looking at from a syndication perspective and looking for investors. Not a value add component here. Very traditional, very institutional based sort of assets. That's sort of what we're looking at when we look at Delaware Statutory Trust. But I wanted to give you an introduction to it because it's where we spend a lot of our time, and it's sort of our introduction to syndication. How does that process work? We will, again, take people through 1031, work with them to identify these Delaware Statutory Trust investments, do that due diligence, and help them close. If you have investors there in 1031 exchanges and they're struggling or need to do a 1031, we are a great resource for this. We have investments readily available. They can ID in a day. We can close in a week. It is a very quick process. So I want to describe that to you a little bit, but here's what I really wanted to spend some time with. The investors that we have that go through the 1031 process, that go through the exchange, we'll complete that process for them. And it's great, and where everyone's happy, yay. The next question they ask us is, what other investments do you guys have? I got 100, 200K, I got $500,000. What else do you guys do? It's like, well, we do look at syndications. I'm an LP investor in a variety of syndications, and so are our clients. So we look at these in various different ways. One, of course, is the 1031 exchange, the DST. We'll also look at tenant in common deals. Those can work with 1031 exchanges as well, and that's always an option. So if that's an option in your deal structure, we're very interested in that. Obviously, we're interested in LPs. If we have excess cash, our investors just love great deals. I'm 100% agnostic to where the returns come from. I want great deals, risk management, awesome sponsors. That's all I really want, right? So that's a way that we interact. We also interact with syndicators as a variety of ways to partner with them to acquire. So for example, we have some syndicators in the Midwest that approach us when they're looking to purchase a property and to start a deal. To say, hey, I'm trying to buy this building. Can you work with the seller to help them think about what to do with the proceeds once they sell? They need help in thinking about how to transition out of this property. We can be a tremendous resource in helping syndicators secure deals and buy properties. So we play that game as well. And then, as I mentioned too, we'll also play this game a bit if your clients need an exit plan and they have no way out. So we've watched some syndicators do a little bit more complicated strategies with their LPs to help them perform 1031 exchanges. And we're here to help you do that as well. So that's sort of our role with syndicators. And then finally on this side, I believe RIA is a channel for you. And so I think traditionally what I've seen, I'll spend a lot of time on LinkedIn. I spend a lot of time with the people that are in this room. I know